Hey, it's Tim from EminiMind and wanted to do a trade recap video. It's Thursday, the 24th of August. For those that were in the Discord this morning, it had some charts and comments on the trades today, so I wanted to run through those in video form here, and then we can talk about yesterday as well. So, gap up this morning, selling off today. We're right at the point where we've kind of made a bearish engulfing candle, and you can see we're at the at least this point in the day. When, with a daily chart, you really don't want to make any assessments on the shape of the candle until the close, as far as what the if it's a hammer, if it's a big body, because like if this candle if we were to rally into the close, well, now all of a sudden you end up with a big hammer. But the reason I can comment about the bearish engulfing is that the high is above yesterday's high and the low is below yesterday's low. So even if, let's say, the low is in for the day and we rally, we still have some sort of engulfing candle. So, but you don't want to base too much of your trade analysis off of a candle that hasn't closed. So that being said, the daily chart, we have come down now to the extension long yet again. And then I drew up the opposing this week because I was expecting us to get a little bit of a bounce, at least to that point, and look to buy some puts up there. So the pattern kind of lately has just been like red bar, green bar, red bar, green bar. So we'll see if if today we close red, then tomorrow maybe we'll get another lift and work our way up to this 44.92 area. But if we go out to the weekly chart, the full halfway back is 40.67 and change. And so we'll see how next month's Fed meeting kind of sends the market, if it's going to be a fall, a bearish trend in this fall or a bullish trend. A lot of times that fall trend sort of kicks off towards the end of September. So intraday today, I guess we can start with the 15-minute for the week. Monday we had a, well, here I'll just pull over my log for you. Monday, the 15-minute stopped out on the first break, and then the opposite direction traded to its target for plus 20. And then Tuesday and yesterday both got a plus 20. And then today was a stop out in both directions, although I had a little glitch with my order that kind of benefited me, but nonetheless, still quite positive week, and there's been lots of plus 20s here lately, especially last week was a really good week. So 15-minute breakout, definitely benefiting from some of these larger ranges that we've been seeing. Let's see here. 1 minutes have been really good this week as well. Tuesday, for those that are VIP members, you can go back and watch the Tuesday live session in the dashboard. I had 4 trades on Tuesday, and then today there was one at the top of the hour here, right at the 30-minute high. We didn't really have any news at 7 or be 10 o'clock Eastern, and so there was this inverted hammer here that you could take for a little bit of a short, and then we rallied. So this got a high tick at highs right at the top of the hour. That was our high tick. It is still our high tick for the day. High tick at highs. So that's always a good one to short below. And then taking the first halfway back, once you break a swing low. So this was the swing low. This was also the top of the 30-minute range. So everything pointing to a great short setup. And so this one did not quite trade up to its halfway back, so you just keep that same anchor point and move down to the next swing low. And that's set up here at 44.64.50, and down she went. And so this one, the way I like to manage these, every trade, but we'll talk about when they really start dropping like this, how you can manage it. The first thing, get in at the 50, stop, 2-point stop, and then once you come down to the swing low and either double bottom, we'll just say if you double bottom, you come down and touch the anchor price, that's when I move my stop to break even, and then I'll come in. So I'll first move my stop to break even, then I'll draw the retracement, then I'll look at, okay, where's the 61.8? Okay, it's 63.94, and then I'll round up and add 2 ticks, so that becomes 64, and then 64.50, and so, at that point, that's your that happened to be the entry price. So rather than try and draw up the retracement and then do that quick calculation and then move my stop, I just go straight to break even when we double bottom, when we touch the anchor point, or go lower, but at least touch that low price. And then I can come in and adjust my stop based on the 61.8 by trailing it behind the 61.8 by 2 ticks. And then when you just start rolling off a cliff like this, that nose diving, then I'll come in and try to trail each candle as best I can by 1 or 2 ticks. A lot of times, these candles are forming so fast, you're just kind of dragging your stop down as best you can. When you get into this kind of a situation, what you want to do is leave your stop above this candle. So this red candle where my cursor is comes down and makes the first low. This next candle, it kind of double bottom, but it was inside the prior one. These are inside the prior one. And so your stop is still up here. So when you get these 2 little green candles of, rise, lift, your stop is still above it. And then when you keep rolling over like this, a lot of times you can start to find some retracements later on that are really small. But if you just kind of keep your stop above the swing high, and then like if you get 1 green candle and roll over, you can put it above that swing high. And then if you really start going straight down again, you can continue to go behind each candle. You can also just kind of, put your stop here, and then, okay, this candle's high is a 54.75, so we'll use a 55.25. That's 2 ticks above, and just kind of ride it down like that. And so you can kind of end up getting out either, on a, if you get really aggressive and your stop is like right here, you can get ticked out, or if you leave it a couple candles behind, it really doesn't matter at that point when you're talking 15, 20 point profit. If it ends up being 16 versus 18 points, like it's all good. So that was that first short, and then there ended up being another short where we came down, and then this was the low of the day. Or this was the we had a low tick here at 710, low tick at lows. But when we rallied here, I drew up the short like this. It didn't really matter if you used this anchor point or this one. Neither of them broke the 61.8. So the drawing long like this, had it been just a touch higher, it would have lined up with the bottom of the 30-minute range and then broke that opposing. But it didn't. It was a little bit low, and we didn't break the opposing, and we already had we still had high ticket highs, and we rolled down pretty strong with not a super bearish breadth in AD line, but compared to where we started, and then we kind of started up here, sold off. We had an opportunity where we came up and made new highs, and we were immediately rejected with this inverted hammer, and then sold back off again. So pretty weak for the bulls today. And so when we got this break of the low tick at lows right here, then you can just take the first retracement short after that, after you get the tick divergence. And that one, it's okay that it's below the 30-minute low because you basically just broke the low of the day and you're going with the trend down. Unfortunately, this one, so the entry 4449.25, and then came down to the negative 23% target. Move stop to break even, draw up your next retracement. It got its 3-point first target, and then a couple of ticks before coming back up, and it retested that entry point and stopped me out. So it did roll over a little bit more, but it was pretty choppy and didn't get a huge follow through right off the initial drop. So not a big deal. Really good day yet again. We can talk about yesterday briefly. A couple of 1 minutes. 54 was my first one. So this is about 25 minutes in. And oh yeah, this one. This is also in the Discord with some a chart and some comments for if you're a VIP member. You can, if you're not a VIP member, just go to EminiMind.com/VIP and you can tune into the live sessions and Discord and all that stuff. But just drawing from lows of the day to at the time, highs of the day. That was the full halfway back. And the hammer, perfect hammer, lined up right here. And so just getting long, one tick above the high, and trailing each candle up to here. And that was the move from that halfway back. And then half hour later, 7:25. This was a double top here. This is not the prettiest inverted hammer, but still counts. And so it was a short below the candle's low. And then this one had a strong move down, but then these inside candles, I just left my stop up here. And so took a 1 point stop on that after the 4.25 on the first one. So 3.25 points per contract on those two trades yesterday. And I didn't have any retracements yesterday. So that was the week. Tuesday, you can go back and watch the live session and see the trades in there. Monday, I didn't have anything. I was so sick on Sunday and just recovering Monday, so I didn't end up trading. I had a stomach bug. So, anywho, feeling better now, and Jackson Hole stuff wrapping up. Should be this weekend, I guess. And then next week we've got. I guess the last full week of August, Labor Day weekend, so that Monday the 4th will be markets closed, and then we have 2.5 weeks until the Fed meeting, and that 19-20 of September. Once we get through that, just be ready for more of these bigger range days. Lots more movement, but it's been definitely a really good week, and nice to see some more volume and. I guess not necessarily volume, but more movement and activity like we will see in the coming months. So hope you have a great week. If you have questions, drop them in the comments below, and we'll talk to you soon. Thanks.